Oh, it's always so cool. You know, I love these days where we're in such anticipation. It's like, what could happen? Like, for example, like, are we live or are we not live?
Who's first?
Kwame is first.
Oh wait, we gotta back it up. You gotta be like, Jillian, guess what?
What's up, Jolene?
Yo, I'm good, It's Thursday.
Oh, man, it's Thursday. It's Thursday. We made it through another week. We made it through another week. Next week is gonna be like straight up lit. I'm so excited.
Man, I'm saying.
On so many levels. You may actually see me doing my LeBron James with the cigar and everything else on Tuesday.
On Tuesday, okay.
Hey, in this glass, water into something just like somebody did at a wedding.
Okay, well, lemon chiffon's on deck.
What's up, everybody? I'm Mark Monroe, accompanied by my wonderful host and great friend and great producer, and of course, Galactic Catalyst extraordinaire, the wonderful
jolyngc, the place to be. Y'all, I'm lit. I'm not lit, but I'm like really excited.
We're on the way to like lit though, for real. We'll get to that.
I mean, this is water.
Yeah, this is. I'm not going to endorse the company, but
right, with a little carbonation, a little bubbly water.
There you go. All right. So, and this is Hot Take Thursday, where a show where Jolene brings forth questions that many of you have and also that she may have. And ultimately, I have to answer. I can't get stumped. I just got to answer and give it to you the best way that I can. Straight off the dome, straight, no chaser, just totally data. And of course, a little lit. But I mean, where are each and every single one of you coming from? Like, we'd like to know, go ahead and throw it up in the chat. And while you're doing that, if you want to become a subscriber of the Come Up series, go ahead and hit the subscribe button. And on top of that, if you like the videos that we do, or if you want to get this message around to other cousins that can join the fold, go ahead and hit that like button. And on top of that, and finally, I should say, not on top of that, but finally, if you want to be in the know for when a video drops or when we go live or whatever else may be happening on the channel, go ahead and hit that bell. It's just, the one that hit all, so that way you can be in the know for all of them, because that makes you a part of the Cool Kids Club, aka the Notification Squad, whatever you want to call yourself. You're just a part of the squad. All right, so, Jolene.
Yo, okay, so I'm cracking up right now. I'm looking at the chat because, first of all, I don't know who was the first one because I turned my live.
Did they do it
late? No, but King Bond spelled out Tesla.
Hey,
they got really close to spelling out the come up, but
they were so really close.
So close. But shout out to King Von for getting a whole word in. He got Tesla.
Yo.
Which is appropriate. It's appropriate. Good job, King Von. But who was first, Mark?
I said Kwame. Kwame was first.
Oh, what up, Kwame?
Kwame was first. All right. So how do we do in, today's market? I mean, it was a vibe today. I felt like, it was like, we felt like certain things was going on. Like, we saw things dropping 27%, things going up a certain percentage points. I mean, do you got a 411 on that?
There was a lot of activity in the market today, but, I felt like I need to see some consistency.
That's fair.
Like this, for all I know, this is just a little dangle of a carrot, little tease. So, I'm chilling, I'm up against the wall of the party like this. I haven't even done the two-step yet.
You just waiting for you're waiting for the song?
I'm waiting patiently.
All right. I see you like that.
Yes.
I see you. All right. So I guess like how did the market do?
So what's up, y'all? What does the cousins jolyngc in the place to be? And this is Hot Take Thursday. Okay. So the Dow was up 19.10 points. And we have the S&P 500 up 19.63 points. NASDAQ, 3 digits, 108.58 points. The VIX
Been a while.
coming down. Yeah, it's been a while. The VIX coming down to 16.10. Yo, I didn't look up the Treasury note. I think it's below. Did it hold at 1.5?
Yeah, I think the Treasury note fell below 1.5.
What?
Yes, it's actually at 1.443.
Okay, then. Thank you.
Or if you want to round it up, well, you technically can't round it up, but yeah, if you feel like rounding it up, 1.45.
All right, so then let's get it on down to sector performance. As you know, there are 11 sectors. We track the top 3 and the bottom 3 so we can see what that rotation is looking like. And today there was some rotation, y'all. Value stocks. It's time to get back to the get back. All right, so we got health coming in at number 1, real estate coming in at number 2, tech coming in at number 3, and then for the bottom 3, we got industrials, materials, and financials. So you can see that rotation. Then for our pick performance, you can find our picks on our Instagram page at that come up series. We got Zscaler coming in at number 1, followed by Adobe. Then shout out to Square. And then rounding out the bottom, we got Apple, TVT, and JP Morgan. So you can kind of see where things are going when you look at the picks and then you look at the sector rotation. And again, a couple weeks ago, was that last week? The episode about sector rotation?
Mm-hmm.
And sectors in general? Yeah. Last week, y'all, check that out because that'll give you a good solid foundation as far as big picture. For me, I need to see the whole picture, big picture, and then I like to drill down. So when you think about that's when we do the market overview. We start with the indexes, then sector performance, and then the picks. So there's rhyme and reason to everything. All right, so Mark, are you ready for some Black history?
Of course.
Well, actually, technically, it's not Black history. Brian.
Before we did that, we did have a 52-week high today.
Oh man.
We'll get to it later.
No. We got to keep it in order. Hold on. Let me see. Don't tell me who it was.
Don't worry. I'll just do this.
Hold up. Usually that's reserved for one company.
Oh, it is? Okay. Wait, it is?
FTNT. Another 52-week. Yo.
Another one.
There is a question from the cousins about FTNT, but we'll get into that in a moment. But I believe that was the only 52-week high we had. Okay, consistency.
We can carry on.
Yeah. Okay. So, as you know, Brian Clyde, he is our official historian for the Come Up series. And he has been doing this really cool thing where he's been curating books. So this time he thought it'd be cool to curate some, a book list it's a Black consciousness reading list for children. Okay. Because we gotta, the kids are the future. So here we go. There are 14 books that he selected. So we have The Snowy Day by Ezra Jack Keats. We're Different, We're the Same, Sesame Street by Bobby Cates, Saturday by Oge Mora, Hair Love by Matthew A. Cherry, The Youngest Marcher by Cynthia Levinson. Mm-hmm. Then we have Little Leaders, Bold Women in Black History by Vashti Harrison, A is for Activists by Inosanto Nagara. Then we have Anti-Racist Baby by Ibram X. Kendi, I Am Enough by Grace Byers, Ada Twist, Scientist by Andrea Beatty, I Like Myself by Karen Beaumont, Baby Loves Gravity by Ruth Spiro, I Love Being Me by April Allen, and last but not least, It's Nice to Be Nice by April Allen, another book by her. So we'll post this in the Facebook group, y'all, so that you can get that list. But yeah, if your children are really into reading, another good thing to do would be to read these types of books and then have the children listen. I don't know about you, Mark, but my grandma used to read books to me and I would be over her shoulder and I would repeat the words. And so by the time I got to school, I could read.
Do you know what your favorite book was?
when I was a kid, it was
Yeah.
Jabberwocky.
Ooh, okay. I know what mine is. Mine was The People Could Fly.
The People Could Fly.
Yeah.
There was another one too.
Porch Lies?
No, Chronicles of Narnia was my jam. Aslan, okay. the Fierce Lion.
Okay.
You know about that.
Hey, look.
Yo, when I really found out that they had Turkish Delight, like in real life, that was a magical moment. I was so happy. I don't really like Turkish Delight, but I was happy that it existed in real life. But anyway, Mark, let's get into these questions. For those of you, yes. Wait, I'm sorry. You know what? I need to shout a cousin out right quick. Hold on.
Let's do it.
This goes out to cousin Tiffany Danette.
Okay.
We just want to lift you up, sis, in prayer. I know this is a hard time right now. And just want you to know that we're praying for you, and we just hope that you stay solid through what you're going through, and it's okay. It's wherever you are at in your grieving process, it is okay. So y'all, if you see Tiffany Danette out there, her Instagram is official_Tiff TIFF. Shower her with love. On her last post, just light her up and just send her some love, because she's going through a hard time right now. So if y'all can send her some love, that'd be great. But Mark, we had some questions, and for those of you who have questions, every Thursday, sometimes Wednesday, depends on what mood I'm in, but usually on Thursday, I send out a post on my stories asking y'all what news you want to cover, or if you have questions, related to the news about whatever is going on. And then put those all together. Mark doesn't know what the questions are, and I just ask him all the questions. All right, hold on. All right. I'm just kidding. Sorry, that's an inside joke from earlier. Okay, are you ready, Mark?
I just want to say there's no place like home.
No place like home. Oh, wait, let's talk about CPI, Consumer Price Index. So it seemed like the market just didn't care, like it was irrelevant. I mean, I don't know what I was expecting.
Okay.
I feel like it was, information. Okay. But I feel like I was like the market too. Like, I'm going about my Thursday. Like, that's cool. Yep. I'm sure there will be some questions about the CPI. So we'll, tuck that in for later. All right. Yeah. So here we go, Mark. This is about Square. So people are asking, will Square go into buy now, pay later space?
It's very possible that they can do that. I mean, essentially, especially if you're going to work with other small businesses and ultimately get into the credit space, then it makes sense.
Okay.
And I would say, don't be surprised if you see a lot of other different financial, whether fintech or traditional systems, do that process of the karma lending. Honestly, I would just say be careful as a consumer. One, I mean, if you can, steer clear. If you have to, or if you must, make sure essentially that you read the fine print. And on top of that, it's like you make a significant financial plan. Not a financial advisor, but just giving you just some pure sage knowledge and wisdom there. Don't borrow something that you can't technically afford. So just putting that out there. But yeah, I wouldn't be surprised if we see Square get into that space at all.
But you know who's blowing me up about that? PayPal. Every other day, I have a message from PayPal talking about, Miss GC, do you want to get in on this pay later? What's up? Like, yo, blow me up. At least 5 messages a day. I'm not even kidding.
Well, I mean, yeah, it's definitely, and you start to see these things as a lure, especially since that, consumer prices, are like, that the consumers are out there spending.
Mm-hmm.
And essentially it's like, if you can allow them to pay off of credit first, and then ultimately allows your financial system to make money. So for anybody that doesn't really understand what we're saying, let's just do a quick breakdown. So when you think about any banking system, banks don't get paid. They don't really make significant money. Like just they make little to nothing off of having your money in the account. Where they make their money is, say, for example, from their credit and their lending side, like a la your auto loans, your credit cards, and your home loans, mortgages, which is really much so. That's a bustling business for them. And it's because of the fact that interest rates are pretty much at some form of standard. Well, now that interest rates are low, and ultimately you go into other spaces in which that you're going to see that people in which that have been impacted and they need to borrow, you're going to probably start to see that you'll start seeing some predatory lending practices may come into the forefront. And ultimately, it's like when you think about the type of lending there, you could be lending anywhere from what is it, 8 all the way up to 24%. So I think the biggest thing there is just, again, steer clear. And just know that if you don't need it, then you don't need it. And technically, if you've been doing fine without it thus far, then that's a clear and evident sign.
Okay. All right, here we go. People want to talk about Apple. So why is Apple not trading up like the rest of growth tech stocks today? Was the WWDC not good?
No, I think that is just more so in the sense that now that we're moving into the second half of the year, a lot of folks are going to have to chew on the data and start to get an idea. I think that a lot of folks also walked into WWDC with some huge expectations for Apple. Mm-hmm. Like, for example, people were expecting to hear about maybe some AR glasses or maybe about the car where they could finally shine some light on it. And honestly, I think that there was somewhat of a letdown there because of the fact that people were looking at, all right, well, maybe this event will shed some light. The biggest thing is that a lot of folks need to weather their expectations. When you think about a WWDC event, it's more so very much software focused. It focuses towards the developers. Now, if developers are excited about the platform or if consumers are excited about the software, then that's a very good telling sign. Another thing that a lot of folks didn't really pay attention to, which is kind of game changing for Apple, is they are coming out with iOS 15, and iOS 15 supports all the way down to first and second generation iPhone SE, as well as iPhone 6s models. So essentially what's just saying that, hey, we don't need to be in a space where we have to make everybody buy a new iPhone, but it's showing you that essentially that we can bring in other things like service revenue. And one of the things that they unlocked is other services through iCloud, as well as bringing other things through their main, I think it's their Apple One services bundle, especially for families, it's growing significantly when you put it into perspective. So, I mean, honestly, I think that, people need to weather their expectations, but I think that moving forward, I think that honestly, as we go towards the road to September, it's not a surprise that we start to see that Apple kind of takes a dip right after WWDC. And then ultimately, now that people can chew on the data, then they'll start to see, oh, wow, we see a huge opportunity to the upside here. So I would say it's only just a matter of time until Apple typically marches to the beat of its own drum, though.
Okay. All right. Let's see. Here is a question. What are your thoughts on Square's renewable energy Bitcoin mining news? Any effect on ARK-F?
Say that one more time. I'm sorry.
What are your thoughts on Square's renewable energy Bitcoin mining news? Any effect on ARK-F?
I mean, for the news headline, maybe. I mean, but more so in the sense of, okay, ESG. I think you're going to start seeing a lot of companies jumping on that bandwagon. Mm-hmm. I think the other part is that there was also a conference that took place for Bitcoin enthusiasts, I think over the weekend. And I think Jack Dorsey was, I guess, heckled by a person in the audience that literally stopped him in the middle of his fireside chat when he was talking. But he remained poised and everything else and still wanted to have the conversation and still discuss. I don't know. I mean, clearly, as you already know, I'm not a huge fan of Bitcoin anyways, but I mean, to everybody else, God bless. I think that honestly, it's a wait and see right now for Square, especially given the volatility swings of what we see with a company or not a company, but with a asset class like Bitcoin. Mm-hmm. I would definitely say this is a wait and see approach. I mean, the ESG, it seems like it's there, but essentially we still need to see more data as it pertains to what is it that they've done what changes, like what is the social impact from those changes, and those things you won't know until later on down the road. So I don't think that they're going to have that heavy of an impact on the stock.
Okay, so we're going to play a game.
Well, you know me, I love games, you know.
All right. This game is called I'll Run That Back. So on Tuesday,
yes,
we talked about, Johari window and, what's known, what's not known, and, investor psychology, and how we can apply that quadrant to stocks and to thesis. So looking at Apple and how it's trading sideways, what can we glean if we apply
the Johari window?
Yeah.
Okay, so some of the things in which that, like, are we taking it from the standpoint of what Apple knows or what I know versus what the market knows?
We want to know what you know so that we can know what you know as well.
Okay. All right, so here's what we know about, like, here's what I know about Apple that I think that a lot of institutional money has not put into perspective yet. Okay. There's a lot of speculation on the forefront of this car, which we haven't really heard anything outside of just like seeing the folks in whom which that they hire. There's also a lot of speculation as it pertains to the glasses, which again, we still haven't fully seen anything. Now we see like little bits and pieces, and that's why I say we have to wait and see, because here's what I do know. And this is from me being from the developer side. When developers now have access to the code of iOS, Apple likes to leave little hints and clues in its software code for developers to sit back and say, oh, well, this is something that they're working on. This is something that they're preparing to release or make available, widely available. There's probably going to be this that's going to support the device. This is how we found out about AirPods Pro and many other devices that came on down the pipeline. And so essentially, once you start going through that source code of the operating system of what's happening behind the scenes, then that starts to roll its way into the rest of the market. See, the market doesn't know that because most folks on Wall Street, they focus on numbers and they focus on the data as it pertains to how does it affect the consumers. So they have to wait for, say, for example, folks that they may contract to, or for folks in which that are in the tech space, to shine light to consumers or to shine light to other developer communities. Hey, these are the things that we found in the code. And then from there, then they start to say, oh, well, given that we see these things, now we got to start, we need to start tweaking our thesis a little bit, because these things are coming down the pipeline and we could be possibly seeing these devices probably hit the streets, or they're preparing for these devices to hit the streets. For example, I'll run it back for you. One of the biggest things that a lot of folks don't really pay attention to when it comes to iOS, everybody's thinking about, okay, hey, FaceTime and iMessage, but they're looking at it more so from the stance of, okay, hey, FaceTime has gotten a facelift, so has iMessage with some of the features. And iMessage, that's great. But one of the things that they're not paying attention to is, think about it like this. Apple has changed its privacy. They've changed its privacy throughout all apps, and notice that you don't get any of those types of notifications for their own apps. That's the first thing, because they say that they don't track. And then there's the other part where, say, for example, within FaceTime now, you can actually make FaceTime calls on a Windows-based PC, and also even possibly even connect with, say, for example, Android users if they want to like FaceTime through the browser, though that I don't know if that's something that can be proven yet, but hey, idea. So when we think about that, that produces a challenge, especially if it gives you the opportunity to do things like share screen and stuff like that. That can pose a significant problem for companies like, for example, well, Google Meet is just Google Meet, but really companies like Zoom, Cisco's WebEx platform, though that Cisco WebEx is way more refined, but it can really put some pressure on companies like Zoom. And the reason why is because of the fact that now it's like you have everybody that's tied to an email address and they can still be in the FaceTime call. Now, that's just very much so in its infancy stage, but it's something that essentially that Wall Street, I don't think that they picked up on, in the sense of saying, all right, well, if we have a lot more folks using this platform, and if Apple starts to see that they're getting a lot more user traction there, could they create something that's more premium that allows people to use such a service and that they would be able to just add to their services revenue. And thus this services revenue would take away money out of the pockets of, say, for example, other competitors. And that's something that you got to pay attention to. Another thing is like, for example, having watching experiences of content. So, for example, if you're watching TV shows, and it's not just Apple's TV shows or movies, but it's across different platforms. That's also huge because why? You've created the social network that ultimately is like, you kind of like, you're not taking any data, it's just allowing them to literally like converse. And if you want to add in, again, other features or other in-app things or other in-app features, now you made that readily accessed and available. So those are just like a slight thing in which that, say, for example, that I know, that say, for example, that most of the, probably the market doesn't quite know yet, because again, they don't have the code. They're not sitting back and going through the code and dissecting it and like literally going through X code and everything else and breaking it down yet. So then here's the parts that I don't know that say, for example, that, you know, that maybe that the market knows. Well, I mean, it's kind of close, but here's something that I don't know. For all I know, I don't know if Apple is going to release its glasses this year. I don't know if that's going to happen. I'm not privy to a lot of those conference calls that they have with institutional investors. And when they have those types of calls, they are bolstering up interest to say, all right, hey, well, boom, like this is what we expect to be seeing, because they're talking to a CFO or they're talking to a CTO or they're talking to other folks of what's coming down the pipeline. I'm not privy to that conversation. Now, here's something that maybe I don't know that maybe also the market doesn't know.
Okay.
We don't know when the car is coming out. We don't know. We don't know if it's going to be software. We don't know if it's actually going to be a hardware device. What we do know is that what we know together is that Apple's going to use Apple Wallet, not only just for financial transactions, but also for things like health, for travel with TSA by using your identification, and then also using it for, well, so we got money, we got travel, we got health. And then there's another portion in which that we can use with the wallet, which is, oh man, it's leaving me because I just had a brain fart. We have money, health,
travel,
identification,
travel.
There was a fifth thing. That I just, oh yes, car keys. So like being able to use keys for your door, being able to use keys for, say, for example, your car, all that running through Apple Wallet. That's huge because now that opens up service, that also opens up licensing revenue that Apple can work with many of the other auto manufacturers. And now they're embedded into the system. And if Apple is working on its UI to ultimately get better, then ultimately they can interact with each other and thus making more vehicles compatible to work with Apple system. So again, there's a lot there that's there to digest. But yet at the same token, there's a lot that's still out there that's unknown that we don't know. We think we know, but we just don't know when it's coming, or we don't know how it's coming, or if we don't even know if it's coming at all.
Okay. And one more part of Run That Back. Thank you for playing our game. Okay, so we were also talking about on Tuesday how we can take economic data and throw it in that quadrant as well, to pieces that we do know, and maybe that can shed light on other pieces that we don't know. So with consumer price index numbers coming out today, and it being, I think it was 5%.
Correct.
And you know, that wasn't expected, and that's high, and that wasn't expected, but yet it still didn't impact the market. What can we glean from that?
Well, I think the biggest thing is that they're sitting in categories in which that are in transition. You know, like a lot of transitory categories. So it's like when you think about the very base of the economy, you're not seeing heavy duty amounts of inflation, but it's telling you that inflation is here and it's very hot, and it may just only be temporary. When we think about things that burn hot or anything that like catches fire pretty quickly, it burns out just as fast. So essentially it's not going to be here forever. I think the biggest thing is that when we look at that type of inflation data, you know, a lot of that, when you're putting together your thesis, you're now asking, okay, hey, well, will consumers still be willing to spend? Well, I think it's going to be a matter of when we start seeing the consumer spending, did consumer spending increase? If consumer spending increased in a high inflation market, then at this point, who cares? If we start seeing that, for example, that the revenue wasn't hit or wasn't hurt, but yet people wanted to spend even more, then again, who cares? We saw inflation, as you said, rise by 5%. So which means that essentially, like, for example, a third of the increase was attributed to a sharp 7.3 increase in used car and truck prices. So essentially, like, for example, if you have a used car, or if you had a car, then you could probably go and sell it for a little bit higher at any used car lot and get more money back for the time being. It's kind of like StockX. It's like you can sell off something in which that is ultimately that you already have, or essentially you can buy something that's already secondhand. So buying a used car and it's worth more because of the fact that one, inventory has been significantly impacted due to new vehicles being hit by a chip shortage, which ultimately drove up the prices for inventory that had already existed. I mean, I'm probably sure that you had a lot of folks who were leasing cars and weren't really using their cars. It was more advantageous for a lot of those dealerships to literally take back the car because then they could sell the car for, say, for example, a lot higher and make a much more premium return versus only taking in the amount which they're getting on the lease. And so they can literally just close out the lease. And I'm probably sure you saw a lot of that across the board. So I think that with that in perspective, it's like, okay, hey, certain things that are economical, they play a role. They definitely play a role.
Okay. So just to make a finer point on that, there's another question from another cousin that says, how does the CPI numbers, how do they affect tech specifically?
I mean, we can look at the consumer price index numbers going up. Like, for example, I'm probably sure that AMD has drove up its prices. We've already known that Tesla's been rising its prices due to like the impacts of supply chain and logistics, so materials. So when you see materials go up, of course, 9 times out of 10, you're either faced with a question as a CEO. Do we want to take this? Do we want to take this hit on our chin, which means that our profit margins are going to be impacted? Or do we not want to impact our profit margins and we move that cost over to the consumer? Mm-hmm. Well, 9 times out of 10, you're going to move that over towards the consumer. So the consumer is going to pay a little bit of a higher price premium. So if you go back and look at it historically at the prices of what AMD or any NVIDIA graphics card or any Intel based chip, you can see that, okay, hey, that their prices were a little bit lower. But now when you look at their newer items and even some of their older items, you can see that their markups are starting to go up a little bit just to a cost for the cost of, say, for example, doing business, which is ultimately producing the chips or whatever technology. You're going to see that happen. And then sooner or later, you'll hit a point where essentially that prices will go down unless we get to a place where another thing, wage inflation. So we're starting to see that where people are starting to make more money. Well, if people are making more money, that's going to drive up inflation because of the fact that the cost of goods will go up because of the fact that they're going to work in tandem with the fact of people's salaries. So those things play a role. So they now know that, okay, hey, if I now know geographically that everybody in this area went from making, let's say, $50,000 to $75,000, then that can actually give me position to say, okay, hey, we can make a rise in our prices as it pertains to the cost of items or products or whatever it is that we sell.
Okay. So here's a question. This is a personal question. I mean, not hella personal, but Anyway, here's the question. What are you and Mark personally doing with your Tesla 23 contracts that are down? So let me answer first because I can just nip this in the bud. I don't have any Tesla 2023s. I'm sitting on 2022s right now, like late 2022, and they have never turned red. They are green as I don't know what, even through the darkest times of quarter one. Okay, like it's still with green. So I can't relate to that question. But Mark, do you have Tesla 2023s?
I do. So funny fact, I had to get back in them because of the fact that I had a little mistake that took place and I accidentally got like pretty much cashed out. And I was so sick because of the price entries that I had. Mm-hmm. So I had to wait for, say, for example, the stock to like come down a little bit, but now I'm back in those 2023s, thank God. But essentially, had I not had a mishap where, accidentally clicked the wrong thing, then ultimately I'm doing exactly what I'm doing right now. I'm sitting down, staying put, and literally, waiting.
Okay. So hopefully that answers your question, cousin. Okay, I guess this is the question for me because you do average down and I don't. The question is, since you don't average down, have you entered new sales in Tesla? Are you sitting on cash, etc.? I do have cash on the side right now. And that's mainly because I shaved off and it's just sitting there right now. I haven't decided what I'm going to do with it. I'm waiting for SMH to, talk nice to me. It's still doing its thing, so we'll have to see. But yeah, I haven't entered any new Tesla since, I don't even know how long I've been in my Tesla 22s. There was a point when last year I was in 2021s and I rolled those to 2022s. So yeah, Mark.
So, I mean, the beautiful thing about options is that you have options. I mean, you could either stay with cash on the sideline, you can choose to average down, but do it within reason. That's why having a plan, so that way you have a set plan to say, okay, hey, here's my cutoff, or here's my marker, or how much I allocate towards averaging down, and then ultimately it's like the rest, I just let it stay and let it do its thing. And if it goes beyond that, then ultimately I got to make some tough decisions. That's another option. Then the other thing is, one of the things that I talked about in 2020 very heavily was I also hedge against myself. So even if I do that, what I can do is I can run it. So let's say you're running in a position that's a 2023 and the 2023 position is down, or it's moving towards the downside. You can see that there's some bearish movement that's coming along. What you can do is you can play a put against that same call position in which that you may be playing, and let that play towards the downside until you start seeing that, okay, hey, that this is a little bit oversold, or that essentially that is starting to show signs of life of a rebound. So then at that point, you can take the capital, either put it towards cash, you could either roll it over towards that same call that you're in, which would ultimately lead to an average down and maybe even change up the position if you'd like. Or 3, you could pick a new position. The beautiful thing about options trading, or about any type of vehicle within investing, is you need to understand that there's no such thing as one thing set in stone. You've got multiple different options. You have multiple different strategies in which that you can do. You just have to find the right one that fits for you and your portfolio. Some of the things that I do, like I love to hedge against myself, especially when I start to get nervous in a position, especially during a specific time. So I do that to protect myself from any downside risks. So if I notice that there's any potential downside, then I will play that put against myself. And then essentially, either if I still have strong conviction within a position, I'll literally throw that in, which gives me a great average down opportunity within the position that I'm already in. Or essentially it creates another potential long-term opportunity for me for a different potential play.
So I cashed out, or shaved off rather, and at first it was gonna go into SMH. But again, like I said, I'm waiting for SMH to hit the number that I needed to hit before we can be friends again. But one thing that I am doing this year is, so I'm taking part of that cash that's sitting on the side. I'm not actually putting it in the market. I'm actually going to be investing in another business. So I just want to, because I didn't, honestly, it's one of those things where, we're talking about, market stuff. So I'm not even thinking about what else I'm doing with the money. But yeah, that other money, that other cash that's sitting on the side right now is going into a business. And then those profits will go into the market. So I'm starting to do this.
And it's like that. The market is fluid like that. It's like the market is never like a one size fits all or one thing that's set in stone. I mean, and that's the beauty of it. I mean, that's one of the most beautiful things about the market that makes it the market, is the fact that you can always come up with a different variation or a different combination of strategy in which that you put together that works best for your portfolio. But the biggest thing is have a plan, and then forth from that plan, build a strategy.
Sorry, that's an inside joke that we got going on right there. Okay, so Mark, we're gonna talk about FTNT because yeah, it's running hot. So the question is, FTNT is still running. How long do you think this run or its run is gonna last?
somewhere I know Zay's like watching very carefully and what I'm So I'll put it to you like this. There's a huge upside opportunity for FTNT, given in the sense of that we're seeing a huge amount of cybersecurity starting to rear its ugly head, in which that there's a lot of sectors and industries that are getting caught with their pants down because of the fact that they were not prepared. And the fact that they were like, oh, well, hey, it's been working so far. It's been working for us all this time that ultimately we'll be just fine. You got meat packing companies that are being cyber attacked now. I mean, those are things to put into perspective when you start putting forth and saying, all right, well, looking down the future, if we're going to be going into a place in which that the cloud infrastructure is going to be heavily involved, then cybersecurity is going to be on one of them. And if those companies that do not have cybersecurity, you're in trouble. You're in trouble. So I would say, like, looking at the range for FTNT, I just expect that FTNT is just going to have a solid year this year. And many companies like it, whether it's the other cloud security companies out there, they're going to do well. Now, of course, if there's a cloud service company that's like tied to another company that got hacked, then they let you know, well, maybe they weren't as strong as we thought that they were.
Yeah.
But essentially the road moving forward is definitely going to be in software. It's definitely going to be in cybersecurity, because as we move forward towards a world that's more digital, especially if we're talking about digital twins, if we're talking about things in which that are cloud service, if we're talking about more things that are AI focused, then essentially, it's, yeah. I mean, FTNT is here to stay. And here's a funny thing. I think a lot of folks don't realize that FTNT is an S&P 500 company. So.
So this is just to put a final point on the inflation piece and the consumer price index stuff.
Okay.
Now, like I had just refreshed it and I see more questions about that. So I guess, okay, let me synthesize these questions and put them all to one, because there's like multiple. Okay, so mainly the question is, because the market didn't react to the high consumer price index numbers, is this an indicator that the market already has that baked in? They already knew that? Okay. That
the market. So like I always told folks from way back when, if you want to go back and look at some of the archive footage, we can now say archive footage of the Come Up series. Imagine that, Jolene. The market tends to price in information about 6 to 9 months out. So essentially things in which that you see, it's like, all right, well, it's priced in. So essentially, like, we've been hearing about inflation too long, and we live in a 24-hour news cycle. If you hear about inflation over a period of time, you start to like become desensitized to the information. At first you start off like, oh man, inflation, what does this mean? Oh, the world is coming to an end, it's burning. And then after a while, it's like, all right, we keep hearing about the same inflation thing, but it's not like really having this huge impact on your life. So then ultimately you start to become somewhat desensitized, and you go to the store and you're like, all right, well, my prices are up. Maybe to buy some apples or some oranges, maybe I'm paying an extra 10 cents or an extra 15 cents. Okay, great. And then it's like, all right, well, it's not as bad as I thought it was going to be. And then you go from it's not as bad as I thought it was to like, oh my God, we're still talking about this. And then from we're still talking about this to like, bruh, who cares? We've been there, done that. We've been hearing you talk about the same stuff. The market is tired. So now the market is over it. And they're like, all right, it's time for us to move on. We're ready to move on to the next thing. Now, if there's something that's even more heavier than what we're hearing in the inflation data, then it's like people are like, okay, it's put up or shut up time. Show us the information. What's going on? If not, then ultimately the market's just like, okay, well, been there, done that, wrote the book. Now we're just living out the reruns. It's time to move on to the next thing. We're over it. So I think that's where the market is starting to show. I think that institutional money is starting to do the same thing. They're starting to realize like, okay, hey, when you saw that big of a drop over those days of the yield dropping, that's something to definitely watch, because it's letting you know that, okay, hey, as yields go down, you'll start to see more risk on start to come on to the market, where you start to see, okay, hey, if we got yields that are down, maybe, just maybe, a lot of these growth stocks that we typically like that are high beta, high flying, they start to look a lot more attractive. So it's time to, like I said, you're starting to see across the board where people are starting to empty out of their savings accounts that kept them nice and safe. for the simple time being, as we were chomping on all the economic data and trying to digest it all. Now we've done that. We've gotten up from our itis. Now we're going to start doing some other things like going for a run, go play some basketball at the court, do whatever.
Okay.
Hopefully I did that analogy to Q's in honor of Q.
I'm sure if you didn't, he would text you. I'm sure he did good.
He'd be like, don't do that.
So sorry, I'm getting messages from your boy Steve.
Oh.
Shout out to Steve. That's all I'm gonna say. Shout out to Steve. Okay, so here's a question. So one of the cousins wants to talk about the SEC crackdown on high flying retail stocks. Don't have to say the specifics because I really don't want to talk about them again. Like just how you're talking about we're over it. Like I'm over this particular one, but
I'm just gonna, you know what? This is what I'm gonna do. To be continued.
Okay, there you have it. You're gonna have to watch another episode to get the full answer for that. Okay, so
I'm just gonna say, just watch the market. The market will start to show you. Like the market always tells people what it is. A lot of times it's like, you when you're watching folks on the media, and you can even look at us sometimes like that. That's fair. That's kind of, that's just me being, 100% like, okay, hey, keep it 100 with you. After a while, it's just like, okay, hey, people get tired of it. So now it's just more so in the sense of, okay, well, what else can we learn? Because this is like we start to outgrow it. And then it's like, all right, now it's time for the real to come forth. And that's where the market is sitting. So the market knows. The market knows. The market will always tell you and show you what it really is and who it who it really likes and who it dislikes. You just have to sit back and watch. And ultimately, like one of the other parts is legal always takes forever to catch up.
It does.
It always takes forever to catch up. Now we're dealing in a world where legal is actually going to have to start moving a lot faster because the world is moving faster. And so essentially it's like, it's about time that the SEC put on its big boy britches and said, okay, hey, we need to start doing something as it pertains to better regulation. Now, what can they do? Don't know. The jury's still out on that one. We'll wait till we see any type of precedent or any type of cases that come forth.
All right, here's a question for you, Mark. What are your thoughts on a LinkedIn investing in Hopin? Is it Hopin?
Reid Hoffman's company?
Yeah, it looks like there's a spelling error. And their $5.6 billion valuation.
Wait, what did they invest in? Do we know?
Say that again?
It was a startup that they had invested in, I think, right? Given that where my title is the way it is for the next 5 days, I can only say this. In the words of TiVo, God bless.
Okay.
I can't really speak on behalf of another, fellow venture capital deal. But I will say this, God bless, and congratulations on closing such a deal.
Well, I will say that that company Hopin, they've been on an acquisition
run.
Yeah.
I will say this just for a heads up. A lot of folks think that only publicly traded companies go on acquisition targets. No, private companies go on acquisition targets too. So when they raise exorbitant amounts of capital, it allows them to go up and buy up any competitors or any people within the space that they would like to partner with, just to essentially beef up or to essentially get better within their platform, because it's cheaper to acquire versus doing all that hiring. That's the first thing. So then the next thing is looking at LinkedIn. It makes sense because of the fact that when you make investments like that, or when you make acquisitions, we know acquisitions when you acquire it. And I think LinkedIn's getting into the educational space within their platform. So that way people can add certifications and everything else to look more marketable for jobs that are hiring. Go figure. But I think the part where it also comes into play, where you also start hedging for the future. So not only do you look at your standard business of what you do on a day-to-day, but you also have to make the investment for the future and say, okay, hey, do we want to spend the CapEx when it comes to those types of innovations, or would we rather already invest in companies that kind of hit our not our timeline, but more so really our plan, our long-term plan, that are they on target? And is this something that would be a great acquisition target for just us to acquire or for us to invest in as a hedge for the future? For if we are right in our roadmap strategy, then essentially it makes all the sense that now we come out looking like geniuses.
Well, okay, so remember, this is a memory. So remember that first Janky episode? And remember we had looked at StreamYard?
We did.
And Hopkins acquired StreamYard too.
Yes, they did.
So for 250 million, actually. So
I wonder what their previous valuation was. I wonder yeah.
I don't know, but Hopkins at the time they were about 2 billion at the time.
Correct.
So I don't know what StreamYard's was. So
I'm just gonna say this: now that we're beyond the pandemic, or we're moving out of the pandemic, I wouldn't be surprised if you start seeing a lot of startups or a lot of companies become acquired that ultimately they didn't really do as hot during 2020, but they have the tech that other companies would like to just acquire along with the team. So I wouldn't be surprised to see that happening.
Okay. So this is a question. So the question is, where can beginners start? Well, we have the starter pack playlist on our channel. That is an excellent place to start. There are a lot of videos that have been curated and put together there. And I suggest if you are going to do the startup, if you're going to do the starter pack, then do it with a friend.
I think we should start doing more startup conversations though. Just so that way the cousins can be aware of like the technology that's coming down the pipeline or companies coming down the pipeline, just to get it. Because I always believe that the startup market always gives you a precursor to what will take place in the publicly traded market, whether they're acquired or they go under. But ultimately you start to see trends, and those trends are set from the startup world. So, that would be something interesting to possibly start doing more and more of, and maybe possibly bring startup entrepreneurs where they can also potentially pitch their companies just for the sake of like the cousins being aware, and also, maybe some other reasons.
I would have my own reasons, aka let me hold a piece of that company. But someone had asked what was on my shirt. It's the Right Slaw formula. This is an ARC shirt, so you can get this from Cousin Kathy.
Yeah, and I'm wearing the Cousin Kathy shirt too.
So
no promotion, but we just like the shirt. But they're pretty dope though.
So speaking of pitches,
yes,
we have the pitch up, the first annual. I'm gonna call it annual because we might.
I think we should call it inaugural.
Inaugural, okay, inaugural. Let's call it inaugural. The inaugural. That's a hard word for me to say. Anyway, the inaugural pitch up competition, high school edition. This is a time for the scholars from our curriculum project to shine. They will be here as in on YouTube live next Thursday, June 17th, 5 p.m. Pacific Standard Time, 8 p.m. Eastern time, excuse me. And I believe there are seven companies that will be pitched. These are actual, companies, like big
publicly traded companies.
Right. So they're going to pitch them. They put their presentations together. We are super excited. They have worked hard. We have our celebrity judges. Everyone from the Come Up series is a celebrity to me. So celebrity judges on deck, celebrity cousins in the building. So it's going to be good. I'm so excited and I'm so proud of them.
I am super duper excited, for us to literally only we only had about a month and some change with these young, amazing minds. And they knocked it out of the park. And I think that each and every single one of you are going to be very much so surprised in what could take place in just about a month and some change. And, a lot of them knew nothing about investing or anything like that. And, just to see exactly how far along they came. It's going to be very, very shocking. And I know that many of their futures are very much so bright. So I'm proud of each and every single one of them that will be on the stage. It's not going to be easy to be on the stage and to pitch something like that. So we definitely want everybody to, tell a friend, to tell a friend, to tell a friend, bring other folks in which that, are their age group into this, because this is something that they should see, especially to see other people that look like your kids watching this video or watching the show. I think that this is going to be amazing, just to show you on a few levels, one, what it looks like when you have, a community that really truly cares. Mm-hmm. That's the first thing. And then on top of that too, just spending a little bit of time just to help other folks and to help them open their minds. You're going to see exactly how that makes an impact. And we're just at the very beginning of understanding of what that impact will look like. Yeah. We've seen parents that have sat in on some of those classes learning alongside with their children. We may even have a surprise there for within Thursday's show. So like I said, it's going to be jam-packed. It's going to be a celebration, and it's also going to be competitive. But I hope that each and every single one of you are ready for that one, because it's going to be amazing.
Yeah, definitely. If you have kids, have your kids in the room. This is like a multi-generational event of sorts. Seriously, like this is that time you can have this, make a whole event of it. Make your favorite meal. Everyone sit down, have your, fancy snacks, lemon chiffons for everyone,
Can I say something else on that?
Yeah. Yeah.
What we're going to see has never been done before. What each and every single one of you will see on Thursday will not have ever been done. From any channel that I've seen or any show that I've seen, you will not have ever seen this before. So I want each and every single one of you to know we're getting ready to witness history, like in the making. So I'm not trying to overhype something or trying to pump up something. I'm just giving you the straight up facts. What you are going to see has never been done. And it's going to be amazing because of the fact that, just think about it. They've only had about a month and a half to literally learn and prepare. Like they literally had maybe 2-3 weeks to prepare for the presentations. And like I said, it's history in the making.
I'm so excited. This is shout out to Legacy Early College. And all the scholars, they have graduation tomorrow. So congrats to the seniors. Many of the seniors will be in this pitch competition. So I'm just super excited. I can't wait. Any other announcements?
I mean, you know what I'm patiently waiting for later on tonight. So
yeah, there was a question about that. The Tesla Model S battery project. Or it says Ant battery project.
I think the battery project, we don't know if it's going to be the new batteries that they're going to have in the Model S Plaid, but I know that they're going to be delivering Plaid. And knowing Elon, I know that there's going to be one more thing. So I'm really, really excited. So yeah.
Okay. Well, we do have 2 minutes, but honestly, it's time to go because one, I need to make sure that I have all my snacks, everything ready to go for the Tesla event coming up. Oh, thanks, Mark, for putting that in the. I'm assuming that was you. It could have been Tigo, but I'm assuming it was you. And I'm excited. I need to see what old boy is talking about.
Oh, I'm about to be watching in full effect, man. I may even tweet a little bit. It's like, okay, you never know. But no, I'm ridiculously excited. So yeah, this is gonna be fun. But I'm more excited for Thursday. Me too. And seeing the future. I'm more excited. I'm seeing a glimpse of the future tonight, but at the same token, I'm more excited about seeing the future of the kids next week, or the young adults next week, I should say. Mm-hmm. In which that, again, like if I'm blown away, that's very much so something, because a lot of stuff just doesn't blow my mind like that. But this has definitely blown my mind to believe that, we did this. I know. And the fact that all the cousins, they're going to be involved on this. I think they're going to be involved on this as well, right?
Yeah. So y'all, you will be able to have the opportunity to vote for a cousin favorite. So there will be a link posted into the live chat. Yep. So you can click on that link and you can vote for your favorite participant in the competition. And then we'll announce who was the cousin favorite at the very end. So there'll be a time when you can vote, and then we'll close the voting, and then boom. So you all also get to be a part of the judging. So I'm excited.
It's going to be a family affair. So, show up and show out for the kids, because I know that, or for the young adults, because ultimately they're going to be nervous. But yeah, at the same token, let's support them. All right, y'all.
I gotta go.
Yo, it's been real. Thank y'all for rocking with us tonight. Have a wonderful evening. Keep learning, keep researching, keep studying. Be kind to one another. And we'll see y'all next week on Tuesday. Till next time, I'm Mark Monroe.
And I'm jolyngc, and the place to be. Yeah.
And this was Hot Take Thursday. We'll see y'all next week.